What's going on, everybody? Welcome back to another live stream. Happy Friday to you out there. And we've got some breaking news to talk about here this morning as it pertains to FTX and Sam Bankman-Fried. So as you guys know, for sure, he has been going around speaking for the first time since the fallout of FTX. And let's just say this, it has not gone very well. At many times, Sam Bankman-Fried seems to be stumped. He doesn't know. He can't answer very important questions about his own company. Shout out to all of the great interviewers who were super prepared to ask the right questions, too. I listened to the space yesterday with Mario talking to SBF, and so many people asked so many great questions. CoffeeZilla was in the house asking hard-hitting questions. SBF just couldn't answer basic questions about his company. It was pretty crazy, actually. And now we're getting word, guys, that the Department of Justice has now demanded an investigation of FTX, claiming there's substantial evidence of fraudulent activities. So I think this is coming out based on all the recent interviews that we've seen. I think this is where it's coming from. Morning, Travis. How we doing, brother? Morning, everybody. How we doing? As you guys pop in, you guys know the drill. Make sure you hit the like button down there. Subscribe if you haven't already. Appreciate you guys dropping in. But this entire story, man, it just doesn't make much sense, right? I mean, I just don't know what kind of ground SBF has to stand on right now, if any. But this is big, guys. The Department of Justice basically demanding an investigation now of FTX, claiming there's substantial evidence of fraudulent activities. Let's see what other kind of headlines we see here based on this. This just came out from Watcher Guru, guys, this morning. So let's see what else we have here. Good morning, everybody, as you guys are popping in. Let's see what else we got here. The memes have been fantastic, too. All right, nothing other than what Watcher Guru is saying right now. I'm sure we're going to get some interesting insights here. But I want to go over and take a look at some of the top headlines regarding this FTX situation. It is interesting to see how people are covering this from different angles. Some people creating like the fluff pieces versus some other people creating like the hard-hitting pieces. Let me go there full screen for you real quick. Let's go. All news. Here we go. Let me go sort by date. There we go. Here we go. So this is what I wanted. U.S. Justice Department wants FTX fraud allegations to be investigated. So there we go. The DOJ is looking into it now. The collapse was described as the fastest big corporate failure in American history in a court filing. U.S. Department of Justice wants an independent examination of the collapse of the crypto exchange giant FTX. Court filing from Thursday shows the DOJ, which was already looking into the fall of Sam Bankman-Fried's global crypto enterprise, now wants a bankruptcy court to appoint an independent examiner to probe potential wrongdoing that may have led to the collapse, which ended in a bankruptcy filing on November 11th. So an examiner could and should investigate the substantial and serious allegations of fraud, dishonesty, incompetence, misconduct, and mismanagement by the debtors. This is coming from DOJ trustee Andrew R. Vara, said in a filing which sought a court order approving a neutral examination. In this same filing, the FTX collapse was described as the fastest big corporate failure in American history. That's pretty crazy. Wow. Wow. Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. That's what the DOJ said in their filing. So pretty crazy stuff. What's up, Superfly? Good morning to you, bro. John Baker, good morning to you, man. Chad, good morning. Good morning. D-Chon, good morning from Iowa. What's up, brother? How we doing, man? Welcome in, everybody. Welcome, welcome, welcome. So, yeah, this is the big top story here this morning, guys. U.S. Department of Justice wants FTX fraud allegations to be investigated now. And I think this is due to citizen journalism. I really do. I think this is due to the great work that is being done by people inside the cryptocurrency industry. And shout out to everybody who's been working hard on this, demanding answers, demanding Sam actually speak about these sort of things, right? I think it's great. I think it's great. It's citizen journalism at its finest. What's up, Daniel? Daniel, do you want to join the stream? You want to talk about SBF and FTX? I'd love to get your insights, man. If you're around and want to jump on, let me know. I'll send you a link. If anybody else wants a link, let me know too, and I'll be happy to send you one. And I want to create a conversation around this because I think a lot of people have differing opinions on what happened here. Well, I don't know if they have differing opinions on what happened here, but maybe the fallout and what this means and what have you. So definitely some of the other top stories here. Let's break away from the SBF stuff. Okay, I'll send you. I got you, man. I got you. I'll send you an invite and I'll drop it to. I'll put it in the moderators Discord link. All right. So then you could just pop on whenever you're ready, man. There you go. Just dropped it in there for you. Boom. All right. Some of the other top stories, guys, aside from this FTX piece, welcome in, everybody, as you guys are popping in here. So some of the top stories. Chainlink staking launching on December 6th. Guys, Chainlink definitely one to watch here. Chainlink has been quietly performing decently here throughout this bear. Well, the last couple months at least. If you look at 7-day, look at that little run up there. Look at the last month. You could see it bottomed out at about 559, back here on 1121, but slowly but surely has been trending upwards. So definitely one to keep on your radar here. Here's the 3-month. It did get all the way up to about almost $9. There are some price targets here for Chainlink. We could see 100% gains here. And I mean, it's not guaranteed, obviously, but Chainlink could hit $15. And it just has to break a couple different resistance zones in order to do so. It's one of the currencies that some of the top analysts have been eyeing, along with Polygon. And I'm going to talk about this in a video later today. But keep your eyes on Chainlink and their staking going live. They're an OG in the space, top 20 crypto. So if you're looking for a really solid project that you're not yet invested in that still has some great upside, Chainlink is a solid one. Chainlink is a solid one, and I don't even own any right now. But I'm going to be looking at it a little closer after what I was reading this morning. So that's something to watch for. Mentioned this yesterday in a video, guys. This was pretty fascinating. Fidelity to SHIB Army's request. We're hoping to expand trading assets over time. Fidelity right now only uses Bitcoin and Ethereum, but they are said to, expand upon this later. It'll be interesting if SHIB is maybe one of those assets added later on. That would be crazy, right? But I think this is just massive for crypto. The fact that Fidelity is now adding crypto and some of these other big players are going to do that, opening the doors up for more people in the traditional financial world to open or to be open to investing in crypto, just to have the opportunity, right? I think it's great for the industry. Let's see here. Robert, what's up, man? Send me the link. Simon Sayers. Simon, where are you at, man? How can I send it to you, man? What's up? Good morning. I'll send the whole link to the Discord. And if you guys want to join, let's have a little round table, man. I'll send the whole link to the Discord here. Let's see. Let's put it in main discussion. If you all want to join the discussion, here is the link. Can I just tweet it out for everybody? I kind of like doing that from time to time. Get everybody in here. All right, you know what? Here, we'll tweet it. We'll tweet it. If you want to join the live stream with me right now, here is the link. Let's talk FTX, SBF, and all things crypto. Boom. All right, so there you go. If you guys want to join, there you go. Come on over and join. There we go. Links out there. We're live right now. Fidelity's not 100% rolled out for crypto, not in all states, hopefully soon. Right, but it's a slow process. And Robert, I mean, it's the start of something, right? I mean, whereas before, and still kind of, we're still kind of in this situation where like financial advisors can't even talk about crypto, right? Imagine when that changes and you have so many people with just huge portfolios that can now make a small percentage of their portfolio into crypto. Like even if it's 1 to 2%, right? Any thoughts on ICP? Sounds like a strong project. Got a bad rap when listed. Here's what I know about ICP. The tech's really good, but it's very centralized, similar to Solana. At least that's what I've heard. And it came way down from its all-time high, though. Let's take a look at it real quick. So ICP from its all chart, I mean, look at that. That's crazy. I don't know how long ago. Yeah, there it is. It was all the way over $400, well over $400. Now it's trading at $4, which is crazy. But yeah, ICP is still ranked 36, so still a high market cap here. Still a top crypto by market cap. This is the top story, guys. If you're just popping on here, Department of Justice demands investigation of FTX, claiming there's substantial evidence of fraudulent activities. And we've got somebody from the community back here. Let's bring them on and see what's up. Jess, what's up? You're live. What's going on? Jess, you there? Okay, we couldn't hear Jess. Jess, if you want to come back on and unmute your mic. Oh, looks like they left. Okay. Good morning, Brett. How we doing, man? Nothing will happen to Sam FTX. He already knows he's safe. Yeah, I think you're right, man. It's crazy, but I think he's protected in more ways than one. I don't know though. I mean, the Department of Justice here, demands an investigation of FTX. This could be, just smoke and mirrors, but I don't know. It's hard to believe that he didn't know some of the things he's claiming not to know. When you're the CEO of the company, you should know your inner workings of a relationship with Alameda and how that business model worked. Considering how much money there was being thrown around. So I just don't believe that for a second. SBF and Hunter got some lawyers. LUNC recently pumping. I did see that. Yeah, I saw that, Robert. Up about 11, 12%. Yeah, I saw that. All right, we got Daniel backstage. Daniel, what's up, man?
Not much. How you been?
Good. I just want to let everybody know, or let me know. Can you guys hear Daniel? I've been having trouble with the output audio here, so let me know in chat if you guys can hear him. Okay.
This is a test of the emergency broadcasting system.
Yeah, I don't know what's going on with my my Mac.
Did you listen into the Twitter space? What was it, Ron, that he had last night?
Yeah. The one that Mario hosted.
That was absolutely surreal,
dude.
I mean, it is I mean, I honestly, after listening to that, I got about a 10% feeling that he is in fact a patsy. Just a slight feeling. I'm not convinced at all, but like, if you are a multi-billion-dollar scammer, that is everything everyone will tell you is stay the hell away from speaking in public, let alone go into a football stadium size forum and
right.
the level. I mean, the way I put it, and forgive my French, is it was like watching Picasso paint in bullshit. Like the man you could ask him if his first name is Sam and he would dodge it elegantly. Like it is, the politicians can learn from this man.
Well, I had heard that I had heard his lawyer said basically don't do this.
The correct thing to do in a situation like this, that any lawyer will tell you, is to just shut up.
Yep. Just say
Don't say a word.
Nothing. Yeah.
And
I mean,
and the fact that he's out just I mean, yes, he's completely bullshitting pretty much every answer. He has not given a coherent or cogent answer to anything he's been asked, anything factual based. I forget Chaz, the fellow who was asking yesterday, really rapid fired at him with his own words brought from the interview hours before, and he did an amazing job. But it's a shame that he got cut off a couple of times during his line of questioning. But I mean, it just that little inkling after he's doing so many things wrong, like putting yourself in his shoes for a second, he's doing so many things that are stupid, that are inadvisable for someone in his situation, that it makes that there is that small inkling in the back of my mind that maybe he is a very complicit patsy, and like a very, very complicit fall guy.
It's crazy.
But yeah, we're still going to see another 3-4 major platforms fall because of this. I'm eschewing all this talk that people are making that the bottom is in from it. Come on, Luna took 3, 4, 5 months before we really saw the end of the impacts from it. We're less than a month and a half in. We've still got another 2 or 3 major platforms going to fall. Solana, I mean, I've been saying for a while that Solana is not going to make it for the next bull run, and I'm still pretty confident that, because they picked up a great deal. I mean, Polygon and Solana were the 2 largest recruiters from Terra Luna's collapse, and they paid absurd amounts of money to projects to migrate to their platforms. So Polygon is in a better situation just in terms of reserves. A lot of Solana's funding for those projects was one way or another connected to FTX in Alameda. So they're definitely going to have a hard time. I'm still, just because of the design of the chain and the underlying tech, I'm not confident that it'll really make it. Like, it'll see a resurgence at some point because you have a lot of maxis, but I'm not confident that in terms of what they wish to build and the ecosystem they wish to develop for the next bull run, that they're going to really have the resources to accomplish it, compared to, like, again, I'm a Cardano maxi, sure, we'll call it that. But I mean, the Cardano Foundation is sitting on, last time I checked, like $6.5 billion of cash money, not of Cardano, not of a token, of cash money that they've allocated to build during bull runs. So they're fully funded in cash money. It's Solana. A lot of the value that they have offered to developers from the former Terra Luna ecosystem to move to them is in crypto assets, which may not exist anymore.
Let me ask you this though. With Solana, I mean, it's still a huge market cap. I mean, we're talking about a $5 billion market cap. Like, how does that just go away? I mean, you've got big time VC money there backing it. Is it a thing where eventually they just say, yeah, we're out too, and that's it?
You answered your own question. Yeah.
Okay.
I mean, 65% of Solana's value is held by less than 24 parties. And those parties will exit during they're not going to sit through a crypto winter, just for the sake of propping up the market. They'll buy in later. They'll join another project that has different tech. I mean, realistically, we've got 3-4 years. I mean, this is what a winter feels like. If this is your first one, welcome to winter. The best advice you can do right now is something that people don't do enough, is build your cash position. So right now, what I advise people to do in general is anything you buy, anything you sell, 20% of that value you put into stables, and you sit on that, and then set a schedule for every 4 months on your phone. So you buy anything, you sell anything, 20% that value, stablecoin. Either add to it with cash from pocket, or 20% of the transaction. Even if it's a swing, no matter what it is, no matter how small, then you'll find yourself in a nice position next bull run. And then on top of that, you pick maximum 3 assets that you're going to be allocating to. So in that, I know you're a big fan of DCA. I'm not against DCA, but I prefer slightly more price-oriented strategies. So look at those 3 assets that you wish to accumulate, and actually set price lines where you're going to double your amount you accumulate, triple your amount you accumulate.
So invest heavy at like particular spots, like not all at once, but like maybe 3 or 4, for example's sake here, like 3 or 4 different spots where you're going to invest relatively heavily.
Well, let's take an example. SHIB, I've mentioned a few times. I had a primary allocation at 876. That's already triggered twice now. But my DCA kicks in at 500. So so when we're at the 505, that's when my DCA starts. Now, what I've been doing is every week I've been allocating to that DCA bag, but if it's above 500, it just goes to USDC, and then that funds my sub 500 accumulation. And then for every 20% below, for every 20% dip it takes under 500, then I double the amount that I'm actually accumulating. So it's a DCA strategy, but it's enforced by a price floor. So the lower it goes throughout the market, the more my DCA is going to compound.
That makes sense. So you're not just buying it every day, regardless if it's up or down. You're buying it at certain time. Yeah, at certain
I'm checking once a week. It is not a healthy time to be checking markets on a daily basis unless you're a YouTube streamer. Like if you're a private investor, do not be looking at your bag every day. You're not gonna, like, no matter how much one asset may go crazy or one day may flare up, it's not gonna. Yeah, you're not gonna be happy with the result.
Yeah. Welcome in, everybody, too. If you guys are just popping in, make sure you guys hit the like button down there and subscribe as well. So we got you in the door talking about FTX and Sam Bankman-Fried. We'll come back to that, but we've got Daniel with us. Daniel's in our Discord. Great mind. If you want to hop in our Discord, the Patreon link's down below in the description. He's one of our moderators over there. I've learned a ton from the man. And hey, speaking of your Cardano, Daniel, so did you see this article? I'm going to have a full video out on this later. They lead development activity for November, right? And man, I mean, so it's not so much about price action. This is coming from GitHub, and it's not even close. So right behind it in terms of development was Polkadot and Kusama. But Cardano, as you mentioned, they've got that big pile of money to really build in the bear market. Are they one of the top performers, you think, next bull run? I mean, where do you think Cardano's top? I know you don't like giving price predictions, but people love to hear them, man. So, like, what are your thoughts on Cardano being one of those, let's say, 3 altcoins that really burst on the scene maybe next cycle?
Well, I mean, they only recently added stablecoin support, and it's not quite reliable just yet. It'll be a couple of months before there's proper liquidity for fully backed stablecoins. I mean, there have been algorithmic ones that have existed for some time. There's one issued by Cody, like Jed and all that. No one really uses them, though. Again, Cardano is, you're investing in the brainiest people that you can think of. There are also other projects that are completely stock full of extremely smart people. But what you have in Cardano generally tends to be very passionate and very, very dedicated, very, very intelligent developers. You don't see, I mean, the shitcoins which exist in the Cardano ecosystem are made as a very clear joke at other ecosystems. Like, there are no meme coins for the sake of meme coins there. There's meme coins for the sake of making fun of meme coins. That's how it is. I never have viewed Cardano as a moonshot. Like, it has massively skyrocketed before, 10x and what have you. Comparing that to Solana, for example, it's nothing. And you don't expect it to. What you expect it to do is to, I mean, again, you still got 68% of it is still staked. And also the staking mechanisms are much more immune to a lot of the problems that DeFi and staking platforms in general have had. I mean, Genesis is probably going to go bankrupt. And I don't know if you, like, one way or another, the vast majority of staking that you've seen throughout the last 2 years in projects, one way or another, filters down to Compound, Aave, which eventually filters down to Genesis. So, like, Genesis was at the root of the tree of lending for a vast majority of projects who had staking in there as part of their project. The way people don't know this, the way that you stake in Cardano is actually delegation. So you don't actually have to give your Cardano to somebody else to stake it. You're just telling the network that this person can vote and mine on my behalf. So the platform you're delegating to can collapse and you don't lose any funds. So so you still have 68% of Cardano being staked in pools. So it's a strong indicator that they've got a dedicated base which will weather a bear market, a winter scenario much more strongly. But I don't expect. But price wise, I don't. If I see Cardano hitting $2.50 to $3, I'm immediately taking a massive amount of profit. Like I did that last run, and I'll be doing that again next run. I don't see a $20 Cardano or a $10 Cardano. It's just not the purpose of it.
What about a $5?
No, like again, potentially, but I'm positioning myself to you know me. I take profits way too early on everything.
Yeah.
I'm not gonna invest with the idea of a moonshot on Cardano because
Yeah.
it's just historically it's only twice been a winning strategy in since 2016. And that was at the height, and those times when it was the case, you could have made 10 times as much profit throwing money at a dartboard. That was the times when you had $3 Cardano jumping up from 25 cents to $1. Those were the times when you could just open CoinMarketCap, throw a dart at your screen, whatever it landed on, buy it, and you'd probably make 10 times your money.
Yeah. Yeah, for sure. DJ says ADA feels like the Kanye of crypto. You either love it or hate it. That's pretty accurate. But you mentioned that big number of staking, or the percentage of people who are staking at 68%. That number was well over 70% at one time, right? I mean, that comes down a little bit in the bear market, I guess. But Hoskinson was talking about how Cardano didn't have any real exposure to FTX. Like, how much of a benefit do you think Cardano gets from that? I mean, downstream, the fact that people kind of see it as maybe, far more decentralized and kind of doing things on their own terms and not so connected to these centralized entities. Do you think that helps them long term, like after the wake of this FTX fallout?
I mean, it doesn't hurt, but I mean, in fairness, the reason there was very little exposure in that regard is because the smart contract ecosystem was so young. It was nascent enough, like it only really started to kick off platforms where you can borrow and lend, and again, fully backed stable coins are not yet a thing. So liquidity is still a large issue in the Cardano ecosystem. It's still a lot of developers developing stuff that isn't really being used yet. If they had the Basho update, if they had Vassal 6 months earlier, then there may have been a great deal more exposure, like to the lending stack. Because honestly, when it comes to lending between centralized exchanges and lending platforms, it doesn't really matter what chain you're on. It matters the volume that can be borrowed and lent. As soon as, I mean, you can look at DYDX on the Polygon ecosystem. That's a platform which out of nowhere came, I think last time I checked, it was like $14 billion worth of borrowed and lent assets in aggregate on a platform that was honestly, like, they had existed for a long time, but they hadn't really actively been a platform for more than a year. So, to go from a $400-500 million TVL to $14 billion in the span of a year is way too fast. And if memory serves, DYDX also pretty much have their value since the downfall of FTX. The underlying problem isn't exposure to centralized exchanges; it's the underlying ethos. It's that the mindset of the majority of Cardano, at least of the leadership of Cardano, and the community there really seems to be against allowing power into the hands of one person. Like I, for example, would love it if one day Charles Hoskinson just said he's retiring. Like, yeah, he'll be a background player, stuff like this, but I don't like to have people you hold up on a pedestal in crypto is antithetical to the entire idea. And to have centralized authorities for on-ramping and off-ramping is completely antithetical to the idea behind it. Again, the whole downfall of FTX is not an indictment of cryptocurrencies. It's an indictment of platforms having control over other people's money without proper oversight.
Yeah.
I mean, I don't think that anyone with it could be intellectually honest and say that FTX should have existed. You should not. I mean, I don't think Binance should exist in our space, to be honest. I mean, yes, it makes people a lot of money when they throw their weight around. 64 billion. It was 64 billion or something like that. I checked the reserves the other day, or something like that.
Yeah.
So having one entity with $64 billion controlled in the space, be it customer deposits or be it just the entity itself, is not healthy. It's too much weight for them to throw around. They're deciding. I mean, the outcome of all this is going to be CZ has consolidated a great deal more influence and power in the crypto space.
It's a monopoly now. I mean, it's got to that point for sure. And it was already kind of there. I mean, they were already above and beyond any other centralized exchange in terms of daily volume or, and just activity. And now with FTX going down, I mean, they just become bigger, right? Like the rich get richer in this space. I mean, so when you think there's going to be more fallout, do you think it's going to come from centralized exchanges, like smaller exchanges like FTX? Like we saw Kraken which, I didn't realize how long Kraken's been around, Daniel. Like, Kraken been around for 11 years. They've been showing their proof of reserves for a really long time. I really like Jesse. I've heard him talk a lot in some of the Twitter spaces around this whole FTX stuff. They had to cut back a bunch of their employees. I don't think that means they're going under or anything, but just looking around the space, I mean, is Coinbase okay? Is Crypto.com okay? Or do you think it's going to be like smaller type platforms or smaller type exchanges?
I'm not counting smaller platforms when I say like 2 to 3 more large platforms. I'm talking.
You're saying large platforms, 2 to 3 large.
I'm talking 5 billion plus market cap projects. Take like probably at least one lending platform is going to go. I find it hard to believe that the impact of Genesis won't be huge. I mean, Aave. I'm not going to say Aave is going to go under, but Aave is going to suffer some massive hits because the way that Aave is structured, it's very unlikely that a good deal of money that they will have to. I mean, they're almost certainly properly capitalized because they're entirely decentralized. You can technically view all of it, but there has got to be some points where people were. You can take somewhat riskier assets and collateralize them for loans on Aave. So you can take Engine Coin, for example, and you can collateralize it on Aave for USDC loans. And so I'm not talking about the platform itself suffering, but I am talking about the large capital involved in platforms such as Aave, sort of not being interested in continuing doing business there. So you may see, I mean, it was $24 billion when I last checked some months ago. I wouldn't be surprised if Aave goes sub 10 billion for its overall capital. And that provides a lot of the engine for a lot of bull market activity. So you're gonna need money printers on. You're gonna need all the risk on assets in classical markets to fill up and to no longer be particularly to not offer returns that like theoretical returns that they can anymore in order for us to really see a bull market again.
There's some great comments in chat regarding USDT, and we've heard some chatter about. USDT's kind of been interesting for a while, right? In that we don't know what's backing it. Whereas USDC,
we know kinda. You mentioned Kraken. The thing is that they posted their proof of reserves, but the big debate is on proof of liabilities. Is that yes, Kraken may be able to show. I think it was like 6.2 billion or something like that. I can look it up quickly.
Is Tether safe right now? I mean, is Tether a safe place to park your money? I mean, you mentioned this earlier, Daniel. Like, right now, I'd be keeping it in stable. Like, which stable would you put it in? DAI? Do you put it in USDC?
You're speaking with someone who, I ate a big hit to my wallet on UST. I had a sizable chunk, but I was at least spread out. Yeah, I was spread out between 4 stables at the time. The ones which are.
Were you in any other algorithmic stable coins?
I was in what was it called? It was AT. I forget the name of it, but it was one that was about $1 billion. No, 1 billion market cap. It was one that was 100% algo, and they issued bonds in order to balance off their books. But I got out of that around the same time as the UST fall. Tether is too big Tether. There's too much stuff propping it up. Now, the thing that they've released in the past vague breakdowns of their capitalization, and a lot of that is corporate paper. Last time I checked, 62.5% was corporate paper. Now, what that indicates is that they have a huge amount of exposure to stuff like Chinese real estate debt, because that's the cheapest corporate paper. That's the easiest and most liquid corporate paper you could get your hands on about 2 years ago. And it's also one of the worst things to be invested in nowadays. Actually, that was true as of about a year ago. Now it's the absolute worst thing to be buying. In this case, you'd be buying the dip. Tether is not transparent enough. It is not at the point where I would consider trusting it. It's okay for general purpose use. I would not personally keep more than 10% of it in Tether. My preference, I go for USDC just because it's accepted on many platforms and it's easy to work with. And Paxos, BUSD is not actually maintained by Binance. It's maintained by Paxos. So they also maintain Paxos Gold with PaxG. So those are ones which are 100% regulated. They're not insured, so no getting around that. But Paxos does an excellent job in terms of being a crypto asset that represents, stored value. So PaxG is that's a one token represents a troy ounce of gold that's held in the London Metals Exchange. The other, like, again, BUSD seems to be as reliable as you can possibly get. Pax dollar, USDP over there that you just passed. It's not a big market cap, but it's also maintained by Paxos. These are ones that if you're looking for something which meets regulatory standards and reporting standards, where proof of reserves has never been a question, then anything by Paxos seems to be the case. But again, keep yourself, you should never have more than 25% of your assets in one stable. I mean, that saved me from a huge hit on UST. I still took a huge hit, but that saved me from getting wiped out.
So DJ's got something regarding ADA. ADA is rumored to be an ISO 2022 play. I'm expecting these cryptos to outperform others in the coming year. How do you feel about the ISO 22s? So the Quants of the worlds, the maybe Cardano, the HBAR, XLM, these sort of assets. Is there too much stock in this idea that all the ISO 22 plays are compliant already and they're going to all explode, or what do you think?
I mean, it doesn't hurt, but I don't think that's something that will make. I mean, it doesn't hurt their image. It doesn't hurt the reliability of the ecosystem. It is definitely a proof that things are stable. But I'm not going to take that. I'm not going to translate that to price movement. I mean, I translate it to something to consider the platform more trustworthy. But I don't consider it to be like maybe it gives some onus to the idea that when we see an inevitable wave of regulation come in, maybe they'll have a bit more time to adjust. But I don't see it as being a price indicator, if that's the question.
Mm-hmm. Algorand's also on that list. So there's a few of them: HBAR, Quant, Cardano, Algorand, Stellar.
But at the end of the day, if the SEC comes and decides that something is a security, being ISO 2022 compliant, 222 compliant it's not going to make a lick of difference.
Yeah. How do you think regulation's going to go in terms of that? Like, are they just going to go down the line and be like, you're a security, you're not, you're a security, you're not? What is what's going to happen with that? I mean,
appearances seem to be that they'll just decide everything that isn't the following three is. I mean, what appears to be the current approach is we're just going to say these three aren't and everything else is, and then
like Bitcoin and Ethereum seem to be safe right now.
Mm-hmm.
I mean, like, you're looking at Fidelity already offering Bitcoin and Ethereum, like, I mean, so like if that's happening and Bitcoin, I think, has already been looked at as kind of completely different as a commodity versus everything else. And then maybe they're just coupling Ethereum in there because it's so big. What happens next? I mean, I don't know. Like, what does that mean for BNB and some of these top XRP? And well, we know what's going on with XRP, but I mean, Dogecoin's right here. What's Dogecoin then?
I mean, arguably Dogecoin among the ones you listed, because it's not a smart contract platform yet. I mean, not in a usable way, and because it was technically fair mine, it pretty much falls under the same terms as BTC.
Yeah.
There's sort of a divide between smart contract platforms and just coin assets when it comes to this. So like,
and what about the ICO element? Is that kind of
so I mean, if that becomes an issue, then Ethereum is kind of screwed. Mind you, so is Cardano, kind of. I don't know. Cardano's initial launch was done in Japan, and that initially was something like 31% of the existing ADA at the time, and by now it's sort of trickled down to about 10%. BNB actually did it in a way where their first tranche could potentially be considered a securities sale, but they have more. But the size of that compared to the size of Binance today is such a drop in the bucket that they could probably cover that in fines and what have you, and make that whole if it were decided to be a security. So BNB is actually one of the few ones where it's a smart contract platform, specifically BSC. It's one where it's a smart contract platform, but they technically, I mean, the problem is that the miner, you can't openly mine it. That's the real deciding factor there, is that Binance selected for the longest time who can mine it, and those are, and it was their buddies.
In order for something to be mined, it has to be proof of work, right?
No.
Okay, you can mine some. Okay, I didn't know that.
So BNB, the Binance Smart Chain, it's proof of authority, which is Binance basically gave licenses to server farms to process transactions on their behalf, and those server farms were miners. So you basically needed a license from Binance. This is way oversimplifying it, but yes, to massively oversimplify it, you needed permission from Binance to mine on BSC. So what you had is 26 major validators on the network, which essentially are validating transactions for BSC. So because that was very much a closed group of people who were the only ones who could make the profits from it, there's argument to be made that they could get hit in a regulatory way. Like but the initial so BNB, the initial coin was initially on Ethereum. So that section, the BNB, which existed on Ethereum at the time, it could be called an illicit sale of security.
Is that still a currency, like a standalone currency somewhere, or no?
I mean, you could. They had the Binance Bridge for a few years up, where you could bridge between the two. And I honestly didn't follow it enough to know precisely. So, but that initial tranche that was available as an ERC20, that could easily be said that was an illegal sale of securities, because you were essentially investing in the success of Binance as an entity and their regulated entity. I mean, when they get slapped the book, that's the part that's really in danger. The proof of authority mined tokens are sort of more debatable. And then in the last, I think that they stopped doing dedicated proof of authority. Like you could essentially, you can start mining on BNB. You just need on BSC. You just need a bunch of BNB right now to do it, and you got to jump through a bunch of hoops. So that section would be safe. Now, looking at the percentages involved, if you were to exclude the amounts made during proof of authority and exclude the amounts made when it was in ERC20, then you could still have enough liquidity in the Binance Smart Chain for it to still function. So that places BNB sort of aside from the others. Dogecoin, I mean, I'm still shocked we're taking it seriously. I mean, it's not. I mean, they're not even pretending to do anything, and yet they're still worth just an absurd amount of money.
Well, I mean, so I want to jump back over to talking about FTX a little bit. And Sam, I see you in the back there. If anybody else out there wants to join the stream, I put a tweet out too, so we can make like a little round table here and just kind of talk shop a little bit. But real quick on the Dogecoin front, what would change things for you in that regard? I mean, like, is utilizing it for payments on Twitter enough, and now it becomes a payment, a currency of a very popular social media platform? I mean, is that enough? Is that all the utility it needs?
No. What's missing is the functionality of the chain, is things that it's designed to do. I mean, it's designed to be an asset to be sent back and forth. You can't, I mean, they have a layer that sits on top of it that you can, in theory, execute smart contracts on. But I mean, you can see by the popularity of like Solana, Aptos, and any of the high-speed chains, that if people are going to make applications, anything from gaming to payment systems to what have you, that you can't have 10 to 15-minute long validation times. I mean, the Lightning Network right now, if you wish to run a quote-unquote smart contract on it using UTXO, then you're waiting a good hour or 15 minutes minimum on a good day to have a Lightning Network transaction completed.
Max was actually crushing it. This is another project that brings smart contracts to Bitcoin, I believe. They were actually crushing it not too long ago. They had a huge spike out of nowhere. Look at that.
Mm-hmm. No, their implementation is a bit weird. You're not actually using the underlying chain. They're kind of sitting on the side, receiving and sending back in. It's not a bad design necessarily, but the preference is that your smart contract be native to the chain you're on. And Dogecoin, for example, is simply not designed for that. Like if the objective is solely that I can send some Dogecoin to somebody to appreciate a tweet that they made, there are much more like, then okay, fine. I don't mind waiting 90 minutes to send somebody props for a tweet.
Well, it is interesting that Vitalik Buterin is on the board. Is there something that he could do to tie it in with Ethereum, to tie it in with, or like, is there something they can fundamentally change?
I mean, it's a simple way to do that is make a bridge, which already exists, that you can bridge your Dogecoin from the Doge chain, lock it up in a wallet there, and get wrapped Doge. That exists. It's not bad. I mean, essentially, you'd just be moving them to Ethereum. It's not like there's nothing bad about that. It's,
Yeah.
I mean, but you're essentially just using Ethereum then. Or you could do the same thing with Polygon. It's not like it's just, it comes down to the technology that underlies it is not designed for high performance, transaction activities and smart contracts. You would need to fundamentally develop the chain and get all the validators on script over there to start using a new one. Like you'd basically just be making a new chain, forking the entire thing into a much more sophisticated chain, and when there already exist more mature and developed chains to move to.
Yeah. So, Daniel, speaking of the FTX situation, I know a lot of people bouncing in here. I know the thumbnail is about FTX, but we're talking about all kinds of things. If you're getting value, guys, make sure you hit the like button, subscribe, and appreciate you guys stopping in here on a Friday. What good comes out of this? I mean, there's been a lot of fallout, obviously, and as you mentioned, and a lot of other people think there's going to be more fallout to come here still from all of this. But what can we take away from this, and how does this, if at all, help cryptocurrency moving forward? I mean, I guess one thing I'll say, and I want your opinion on this, one thing I'll say is I think more and more people are taking the idea of controlling your keys and really getting all of your money off exchanges more seriously. I know I have, and I think a lot of other people are starting to see kind of why this is so important and why exchanges, for the time being, could be a place where you day trade, could be a place where you onboard or offboard, but there are things being worked on to onboard and offboard in a decentralized way. Clear Crypto is one of those assets out there that's working on that with the fiat on-ramp and soon a fiat off-ramp. But what could we learn from this? Like, how does this better the space 3 to 5 years from now? I mean,
sadly, if you're talking actually 3 to 5 years from now, sadly, it won't. Because you will have people will just be, it will be Coinbase next time, or it will be Kraken, or it will be, I mean, I'm sad to say it, but realistically,
but how do we get away from that? I mean, because, okay, let's unpack this.
You have to make, I mean, again, you know me, I've been saying that centralized exchanges are poison for probably the last 5 years, give or take.
So why did they get so big, and how do we unravel that?
Like because it's easy.
Convenience.
I mean, right now, even using a centralized exchange right now, I'm here in Israel, and it takes me about a month and a half of jumping through hoops just to move money to a centralized exchange, just so I can move it immediately off.
But can't we build something that is just as convenient and just as intuitive and just as easy to use as a Coinbase is on the decentralized side of thing? And
the largest obstacles to that generally are regulatory, and because of the sort of half-assed way that regulation in crypto does actually get rolled out, that stuff like FTX happens, and then people who really don't understand the tech or the environment or what or sort of what the ecosystem is end up writing. First of all, they can never write legislation to keep pace with how fast crypto evolves, regardless of whatever.
From the United States perspective, do you think when the Fidelities of the world and the Charles Schwabs and everybody, do you think everybody eventually just buys their Bitcoin through those centralized agencies that are well respected, that are obviously credible and all of those sort of things? Do you think that pushes out the centralized exchanges within crypto when people could just go right to their brokerage account that they use for stocks to buy crypto? Do you think that?
Older people for sure. I don't know anybody over the age of 50, with the exception of maybe Austin, who would not prefer to buy a Bitcoin ETF as opposed to, or an Ethereum ETF as opposed to. It's because, but it's not. There's nothing to do with the trust. But no, but it has nothing to do with the trustworthiness of the money what's the word? A money transfer institution that you're using. It has to do with insurance. I mean, the reason a Bitcoin ETF is I want to say needed, but is more comfortable, is that there's no rug to pull. If it gets pulled, you're FDIC insured. I mean, Grayscale's Bitcoin ETF. The sole reason why you're essentially, I mean, right now, if you're accumulating Bitcoin, you should probably be buying GBTC instead. I mean, assuming that you're confident that Grayscale isn't going to collapse along with Genesis. But
you're buying a rumor too.
Well, it's iffy. I'm not convinced. I'm convinced that they're segregated enough, simply because you can view the wallets of GBTC, and they're not. They don't need to refund money to people. They need to refund Bitcoin. And there are wallets there. I mean, and it doesn't appear that they've lent out. their BTC to anybody. That would be the nail in the coffin for Grayscale. If it's found out that they were lending out their actual held GBTC reserves or their BTC reserves that back GBTC, then yes. But the fact is, right now, you're buying Bitcoin at between a 15 and 20% discount if you buy GBTC. You know what I mean?
Yeah.
It just makes sense to do it. You can't redeem it to Bitcoin. You can't hold it in a wallet. But in theory, that's FDIC insured.
Yeah, that's interesting. So in terms of this FTX stuff, do you think Sam Bankman-Fried goes to prison? Do you think he goes to jail, or is he protected?
I don't mean to sound too grim, but I think he'll be found dead.
Really?
It only makes sense to me that it only makes sense to me that he comes out and talks as much as he does about losing this much money. If one, he's a very complicit puppet, a very complicit patsy in this situation, and he honestly is trying to figure out who's been pulling his strings. I give that about a 1 in 10 chance.
There's just no way, in my opinion.
If he is, I mean, I find it hard to believe that he is this stupid, because he is a boy genius, and the only thing
he's a quant guy, right? I mean, he's in like the 0.1% of people that
he has a background in physics and background in physics. And then he worked at Jane Street for a couple of years, but it's I mean, also the crowd he hangs out with are mostly mathematicians and CryptoPunks, cypherpunks. Sorry, it's not it doesn't make sense. His behavior does not make sense unless something like either one, he absolutely knows that he's protected, or he's got. I mean, you don't reach a private wealth over $1 billion without having some sort of bug out plan. I'm lucky enough to know a couple people who are worth over $1 billion, and every one of them has got some sort of shit hits the fan plan to bug out. I know one fellow, I won't mention his name, but he's got, in 2 continents, he has got bunkers that used to be nuclear missile silos.
Yeah,
and he's got.
Very popular among the.
So I mean, with you don't reach that amount of wealth without making some sort of exit strategy just in case. So either he's plotting suicide or faking his own death, one of the two. I mean, if one happens, the other will be assumed. Or I can't rationalize his behavior. He won't just suddenly, I mean, unless he's just a heavy drinker because of all this and just can't keep his mouth shut. But I don't see that as being a possibility. He's too coherent when he speaks, and he's too good at dodging questions. Sadly, I see a very slim chance that if he goes to jail, it will be for anything more than like 10 years.
But he's obviously been schooled to answer particular questions a particular way, or dodge questions a particular way. But then on the same hand,
he's the Jewish son of 2 Jewish lawyers. I mean, come on, that comes with the territory.
On the same hand, though, it's like his lawyers are telling him not to do this. So, like, it doesn't make sense. It doesn't add up, and he's not prepared. He's not. I mean, you could tell it's terrible. Like when he's stumbling and fumbling over his words, he's searching for something to say. I mean, and I don't know. It's just.
No, but he's not. But he never once gives an answer of, I can't discuss that because I have to figure it out with my lawyers. He never. I didn't hear a single time where he said, though, where his, like, he may have referred to, I don't know this piece of data. I don't know exactly what happened here, but never once was his fallback. I need to check with my lawyers that that's okay for me to answer.
Did you see this? And sorry, I can't play this on screen, guys. I'm having issues with my Mac. I got to send this thing in and get the audio output figured out. But I'm going to play it from my phone here through the mic. So the New York Times audience gave SBF a round of applause for doing an interview about committing one of the largest frauds in U.S. history. So listen into this.
On behalf of everybody here and on behalf of the public, I want to thank you for engaging in it at a time, in truth, when I know you've been advised not to. So thank you so very, very much. Thank you.
What is that?
Never judge a room full of people. Groups of people are generally stupid. Individuals are smart. Groups of people are stupid. But that doesn't, I mean, it doesn't have any practical impact on things. I mean, whether or not money is, I mean, yesterday in the space that he was there, he was mentioning, and this was very interesting, the way it was dissected by Chad there, Chaz afterwards, who was asking questions. But, you know, yesterday in the Twitter space, SBF mentioned something like FTX US will be made whole, and they're looking to return between 10 and 30 cents on the dollar to FTX International. And that approach is extremely devious, because you're essentially splitting, you know, the largest market out of it, and you're saying these people can get back 100% of their money. These, you know, everybody else can get this. You're essentially, you know, dividing the people who are going to be coming after you, even though it's almost certainly complete bullshit.
Welcome into everybody in the chat, guys. Make sure you guys, if you would, hit the like button, would help us out a lot, and subscribe if you haven't already. If you guys are here hanging out with us. And Daniel's here. Daniel's one of our lead moderators in the Discord too. So if you're wondering who the man is behind the wolf there, is that a wolf? Is that a wolf?
Mm-hmm.
Yeah. Yeah, this is Daniel checking in. So he's been around the space for a long time, guys. Really, really bright mind, as Muzz said in the chat. Another one of our Discord moderators.
Well, what's up, man?
How about the go ahead.
No, I was just shouting out the Muzz and Boca. Sorry, I wasn't watching chat.
Yeah. What about the political donations? What do you make of that? I mean, and it's speculating, right? But I mean, like, why do that? Is it simply to, if the shit hits the fan, these people should have my back?
No, it's when you're very rich, you buy politicians. There's nothing mysterious about it. When you have billions of dollars, the way you secure your wealth is to have a lot of politicians on your side, doing your bidding and following your interests.
It's crazy to me how many. Go ahead.
No, it's not about blaming. It's not saying it's the ethics of it aside. There is a great deal of money in politics, and it is possible in this day and age to buy, especially U.S. politicians, by funding their campaigns. Most politicians nowadays in the States spend, I think it was 62% of the time that they're actually considered working fundraising. So if you're saving them time for them when they don't really know anything about crypto or care very much about crypto, and you're going to make an absurd amount of money based upon their decisions, it pays to own them. I don't think that. I mean, does that protect him? Almost certainly. He's got a lot of power coupons. I mean, it's the same. I hate to say it. It's the same reason Epstein got away with what he did for so many years, because he has unlimited power tokens.
Because Bill Clinton was there.
It's the same, but it's also the same thing that got Epstein killed.
Yeah, for sure. I mean, so what amazes me about this, one of the things that amazes me about this, is how many hedge funds had money wrapped up in FTX, and how many hedge funds obviously didn't do their due diligence. Was it a thing where it was like follow the leader? Like once one hedge fund went in, it was like, well, if everybody's, investing with this guy, then let's invest with this guy.
I think the stigma that hedge funds are extremely skilled at research is hilarious. They seek out risk. There is not some massive team of quants sitting there at the majority of hedge funds. The quants, the people who are algorithm developers, they do high frequency trading for hedge funds. They very rarely are involved in the research aspects of things. The levels of due diligence that hedge funds generally tend to perform is extremely lackluster. They're not careful with other people's money. Venture capital, however, should be much. VC that was behind the FTX should have, they really dropped the ball on due diligence there. Hedge funds, I mean, the objective there is risk, extremely high risk. Venture capital are supposed to be Chamath Palihapitiya has been extremely quiet on FTX. He got interviewed twice, and he did one video on his channel. But Chamath he's the Indian fellow who's got a weekly channel.
He was at Google, right?
Originally? Long time ago. Yeah. But I mean, he's a huge funder of Solana. He's a huge funder of I think Aptos as well. But I mean, if you look at the connection of what FTX was financially involved with and what Chamath Palihapitiya was, there's a lot of intersection there.
Well, the one thing that I remember Chamath saying was to Sam was to get a board, create a board of advisors, and to that, I mean, obviously they didn't. That question was asked.
A board of advisors is one thing. A board of directors is a whole different story. I mean, having the control of the company.
You're right. Board of directors, board of directors, not advisors. You're right.
I mean, Sam had things set up in such a way that, I think it was Alameda, he held 75%, give or take, and in FTX he held 51%, pretty much. and then there was another 10 and 12% held by the other two fellows involved.
Well, I think it's very clear he didn't want any of that because this was a very top-down organization. I mean, so from some of the insiders who I've heard speak in those spaces with Mario, and shout out to Mario, has done a fantastic job.
I think it could have been yes. Like
overall,
kudos,
he's done a great job. I mean,
but that could have been executed a lot better.
100%. But it's hard to manage that kind of.
He was right. He was right when he was explaining that, like, you can't just come and attack him. He'll just leave.
Right.
But I mean, he had people there who are beyond experts in several fields involved, and who were executing extremely calculated lines of questioning. And they were getting cut off, and that was I mean, yes, you got to keep him on the mic, but you also got to light a fire under his ass.
100%. But I think overall, what he's doing during this whole thing, I mean, since it started, is a positive. But he's had insiders on. This was early on when the whole thing broke, that basically were explaining how the organization ran, and the fact that you couldn't even speak to Sam if you were somewhere down the line, right? I mean, it was very, very top heavy at the time. He was very untouchable up there, and I think that was by design, right? Because this is what was going on behind the scenes, and if anybody got wind of that, it would tear things down. So it was very, very top down. It was not horizontal. It wasn't everybody's in this thing together type of organization.
I've worked at startups, and that's very rarely by design. I assume that they grew sort of at the usual pace and the usual direction that startups grow. And it is very normal for there to be no clear defined vectors of communication and clear procedures and stuff like that. No matter how large the company gets, stuff like that just takes decades to put into place. The place I currently work went from startup to as enterprise as can be. And still today, there's all sorts of legacy communications and problems. When you have like lower level developers trying to bring up issues that there's it takes 2 months to get it to somebody who actually needs to hear it. So I mean, I don't take that as a planned obscurity. I take that as young people with tons of money. This is a system we've been using since we started. It's made us tens of billions of dollars in net worth. Let's keep using it, and let's not ask questions. It's normal growth, and it's normal human nature. It's not. I don't attribute that to malice. I attribute it to stupidity.
Did you hear the Good Morning America interview?
No. With whom?
With it's that last name I can't say. George Stephanopoulos. So here, let's listen into a little bit of this too, and we'll pause it at some point here.
A lot of people look at you and see Bernie Madoff.
Yeah. I mean, I don't think that's who I am at all, but I understand why they're saying that. People lost money, and people lost a lot of money. And I mean, at the end of the day, look, there's a question of what happened and why, and who did what caused the meltdown. And I think that reads very differently, right? When you look at the classic Bernie Madoff story, there was no real business there. The whole thing, as I understand it, I think was just one big Ponzi scheme, right? FTX, that was a real business.
He was at the top of the cryptocurrency world. 30-year-old billionaire Sam.
I don't know.
That's debatable, but
right.
I mean, but in fairness, that's true of the majority of crypto nowadays. I mean, the vast majority of crypto ecosystems, there's no actual business underlying it. It's 100%. It's 100% speculation. I mean, it's not a comforting thought, but I mean, the takeaway I think that everybody is slowly understanding, but they're going to forget by the next bull run is, I mean, the entire idea behind crypto is that you have self-custody of your wealth. You have, the assets that you have, as speculative as they may be, are yours to hold on to. If somebody comes offering you unrealistic returns or or simple, easy way to do things, it's nonsense. I mean, I really wish. I mean, kudos to CZ for coming out and saying take your money off of Binance.
Right.
Like
Jesse from
encouraging.
Kraken said the same thing. Yeah.
It's, I mean, that's probably the healthiest thing that came out of all this, but it's this is expected. I mean, FTX collapse was not a surprise. This is not a shock to anybody. This is the natural progression. I mean, this is pretty much what happened during the ICO craze.
Yeah.
Which is why predictably we're going to see another 2 or 3 major platforms fall.
You know what? Interesting. Go ahead. Go ahead. Sorry.
It will continue until you have very little viewership. I'm sorry to say, but it would this will continue until everybody is sick of crypto. And I mean, this is some of the best advice I can offer to people is go onto your phone right now, set a reminder for every 4 months to just take the 3 assets that you actually care about, that you have a strong amount of confidence in, layer ones preferably. And you know, don't pick tokens, don't pick SHIB, sorry to say it, but pick 3 layer ones that you have absolute confidence in, probably BTC, ETH, and whatever your third favorite is. And then just set a reminder every 4 months to check it. And just so that eventually at some point during the following collapses, you will get sick of hearing crypto. Probably the vast majority of people here will get sick of hearing of crypto. And if you actually see that reminder a year from now, and you put $1,000 at that point into those assets when they are going to be down another 50 to 70% from what they are today,
do you really think it's going to go that much lower?
Yeah. I don't. Furthermore, I don't see the argument against it. Like I approach my valuation and I approach my market movement analysis sort of the opposite way. I don't assume things are going to be good. I assume I find an argument against what's the strongest argument I can think of right now for continued market decline, and what's the argument I can find for things moving sideways, and what's the best argument I can find that's supported by evidence and facts and numbers, most importantly, that we're going to see a turnaround and an increase. And I have yet to hear a coherent argument that we're seeing a turnaround, things are going to skyrocket. It'll happen eventually, but money printers need to be on for a long time before we can go to that. For
sure. And I think the good portion of 2023 and maybe all of 2023, we're still going to be battling with, recession and inflation. I mean, that's not going to come down anytime soon. I mean, it looks like it maybe is starting to come down slowly. Hopefully we peaked in June. In terms of the
sorry, but I find that I don't see it.
Really,
like one or two in a row CPI reports. If you're focusing specifically on the things that don't really have macro factors conspiring against them, I don't see it. Like if you're specifically looking at core inflation numbers, you're missing a lot because right now the macro factors,
energy is a bit.
Energy is one of the biggest influx, and food supply over the next year is going to be a massive factor because you have, I don't know if you want to bring this to a macro discussion, it's up to you. But overall, food supply in the next year is going to be a problem because, the largest fertilizer manufacturer in the world is still at war with the third largest and also happens to be the second largest grain producer in the world. The infrastructure for providing food to the world is only not really collapsing right now because this last year had a very bountiful harvest for the vast majority of agricultural countries. Next year, you're going to see massive shortages in fertilizers. You're going to see massive shortage in energy methods. The U.S. is placed in a prime place to weather the storm. The U.S. is actually extremely well off for the next year. Luckily, the U.S. can pretty much feed itself. It's got Canada for potash supplies, nitrogen supplies. It's got plenty of energy supplies, and more importantly, the U.S. energy markets are agnostic as to where energy comes from. So if you're in the U.S., your gas price is not dictated by the 5% most expensive. If you're in Germany right now, then the cost of natural gas for you, the cost of energy for you, is dictated by the 5% the 5 most expensive percent. So the analogy, I think it was Peter Zion who laid it out. If it takes you a gallon of gas to get to work, and you can only buy 9/10 of a gallon, you will pay whatever price is necessary for that extra 1/10 of a gallon because otherwise your life is disrupted. But the U.S., your energy markets are organized in such a way that you have so many sources of energy, and it doesn't matter really where it comes from. It can come from Canada, it can come from Saudi Arabia, it can come from Russia. that it doesn't make that much of a difference for places, you know, like Poland, Lithuania, Germany, especially the German manufacturing base. They care a lot where their energy comes from, not in a political sense, in a chemical sense, in a logistical sense. The German manufacturing base cannot function for another 6 months, paying 10 times as much for natural gas, which is basically what they're paying right now. So there's a collapse of Germany for you in the next couple of years. It's a collapse in the German economy, not a collapse of Germany. Versus China, for example, where food shortages and what's going to be a massive outbreak of COVID, because they just had a big collection of super spreader events and they don't have effective vaccines, and they basically had no natural immunity because they've been locking people in buildings. The Chinese Communist Party will not be in existence in 2 or 3 years, and I would find it hard to believe that by the end of the decade, China will exist as a country like it does today. Simply because they have so centralized power around Xi Jinping that any flaw in his design becomes treason. So they either need to kill a whole lot of protesters and let a lot of people starve. I'm being dramatic. I'm sounding hyperbolic here, but I'm very much being serious. There are large swaths of China which will not be able to be fed without massive changes to their farming infrastructure, to their energy infrastructure. China can float for about 3.5 weeks without receiving imports. So anytime anyone has ever brought up in discussion U.S. versus China in a war, they need to understand battle strategy. You don't go to war with China; you just blockade them for a month, and then their economy cannot function. You could take down China with a few destroyers, just parked in specific bottlenecks throughout international waters. I'm not saying I'm thinking it's going to be a Chinese-U.S. war. I don't see that. It's just silly to think that anyone would go to direct war with the U.S. But if you look at the infrastructure of feeding people, the U.S., Canada, and Mexico are probably the best positioned in the world. There's a lot that the U.S. could do to improve things. I think it was the Jones Act in 1920, which prevented it sort of stipulates that if you're in the U.S. and you want to transfer something by water, like waterways throughout the U.S., that it has to be a U.S.-owned ship, staffed more than 50% by U.S. By solely U.S. entities. So it has to be like U.S. employees living in the U.S., everything like that. So it became very hard to transfer things by maritime transit in the States, which is why railways are so popular. And you're about to have a massive railway strike, or maybe not, but you'll have disruptions in the railways. It would be very beneficial. If you live in the U.S. right now, I would probably be lobbying your representatives to consider modifications to the Jones Act. It's extremely. I mean, it was post World War II, when you had a lot of companies who were foreign owned doing transit of goods throughout the U.S. By the waterways that are there, and it was designed to employ more people in the U.S. Today, it's not necessary. It's much more of a hindrance. But overall, the U.S. is positioned. They have a very closed economy between them, Canada, the U.S., and Mexico. Like there is enough capital there, and there's enough resources there that they can pretty much weather any storm. Europe, Asia are very screwed because they completely rely on the U.S. maintaining maritime law in order for world economies to function. I mean, the entire idea that I can make a product pretty much anywhere in the world and sell it pretty much anywhere in the world without needing to worry about getting it from A to B. And I can make a supply chain where I get something made in China sent to me, I send it to the US and make it and sell it, sorry. That exists by virtue of the US Army, the US Navy essentially making waterways safe. And if the US, it is not unrealistic to think that in a recession environment, in a prolonged recession environment, or call it a depression, if you will, that the US would stop providing that support to the rest of the world, or at least scale it down to their own individual interests. Like waterways to Saudi Arabia probably will never be interrupted. They'll still be patrolled by the US. But at a certain point, I don't think the US is going to make sure that China is able to sell things to Venezuela. Like, it just doesn't make sense for them to put those resources into play.
Right.
So when we start, if and when, I'm assuming when, but it could be an if, when we start seeing the US scale back its monitoring of world waterways to a great deal, more to protect its own economic interests in the case of a prolonged recession, that's when we start to see I would, if I lived in the U.S., I would start investing in companies who profit off of labor in Mexico and resources in Canada being produced and used in the U.S. Sorry, I took it off. I took the conversation way off topic because you were asking about SBF.
This is how we'll survive the bear market. We'll talk about macroeconomic things, and we'll continue to bring you on. No, I mean, I think this is important because it does play a role. I mean, all of these sort of things do play a role in the overall markets. And speaking of that, do you think the stock market comes back before the crypto market? Do you think, obviously, you're under the impression that crypto won't come back until, what would you say, 2024? Is that what you're, I mean, is that what you're suggesting?
I'm not, can one of the mods ban the For Your Love?
Is it 2024? We'll say 2024, 2025-ish. Is it?
No, I don't. I see a lot of runs over speculative and futures investments, with
In
propping
crypto,
up the market.
or in
Crypto. Are you asking about a sustained recovery, or are you asking strictly about a price recovery regardless of how long?
Well, I guess the second question, but I'm also asking, like, what comes first? Is it the stock market first and then crypto still lagging behind? I mean, or do you think they'll come back together?
So what you start to see is you start to see money moving from the core value preservation long-term stock market holds, not necessarily real estate, but stuff like waste management firms, metals, mining, core manufacturing, and what have you. When you start seeing money move from that to risk-on assets in the markets, and lending becomes extremely cheap, then you can only go to risk-on assets in the stock market to a certain point before it's sort of saturated. Before every ounce of speculative potential there has been filled, and you need to find somewhere else to put money that you can risk it in order to get attractive returns. Putting money into Apple has diminishing returns. I mean, one of the things that excuse me one sec. One of the things that I can't recall who it was breaking it down, but index fund bubbles is a very dangerous thing. I mean, for the last 7 to 10 years, mainstream investors, people who are interested in just dipping their toe in the markets, have been pumping money into index funds. And if you look at the value of the constituents of an index fund nowadays, and you compare it to the value they derive from being in an index fund, there is almost certainly a bubble there. So that's when we see money going off of safe investments into risk-on investments, then you start to see an environment where crypto can go into a speculative bull run. Does that kind of answer the question, or?
Yeah. I mean, I guess what I'm really trying to get at here is what we've seen this year in terms of the stock market and crypto kind of flowing together, moving together. Is that something we're going to continue to see, and will they move together when things do come back? Like,
no,
or is this just a unforeseen circumstance, given that it's just the start of something really bad and all markets are coming down at the same time?
So I mean, to answer in a roundabout way, it is disingenuous to call Bitcoin a blue chip, because a blue chip essentially, I mean, it comes down to the physical value of assets. Okay, if you take Apple with a $2.1 trillion market cap, like, regardless of how much people sold the stock, there's still production assets there. There's still intellectual property assets and what have you that can be sold for money if everything else goes. That does not exist in crypto. There is no metals ownership of Bitcoin or anything like that. So because of that, it is 100% speculative in value. You're only going to see a coupling between conventional markets and crypto as long as there's still appetite for risk in markets. And then as soon as the appetite leaves, the appetite, generally speaking, the appetite for conventional risk on assets will return first. And once those begin to saturate, then you'll start seeing money flow back into crypto because people are willing to give it a try again. But I don't expect that to happen within. I would be very surprised if that happened in the next 3 years. I would be,
really?
If I see, I mean, because it takes a long time. I mean, okay, after the .com bubble, it took nearly 5.5 years just for risk-on assets in tech to really start to gain large scale capital. But that was also a slower time. Like markets were a lot less efficient back then.
Right.
And crypto markets are still massively inefficient at pricing anything in. I mean, things go absolutely way more than they should based upon small changes in valuations. It's just the nature of how liquidity works in crypto. Trying to time things is never efficient. Trying to price things is really is really how you make the money. Trying to do not try to guess at this point what you can pick up very cheap, and then when you can pick it up cheap and when you can sell it, price it. Okay, like you're interested in Cardano and Bitcoin, set the prices and allocate the funding for those price levels that you think have a possibility to hit, and then have those trigger at prices. Don't have them wait patiently for. I mean, you know me, I waited for what 2.5. I waited since November of 2020 with SHIB in order to wait for my 875 to trigger on SHIB. And I'm still waiting for my 500 to trigger. It's not about when things are going to happen and a timeline. It's what was it? What's the old Buffett phrase?
It's about time in the market, not timing the market.
No. It's the stock market. He's speaking about the stock market, but the stock market is a device to transfer wealth from impatient people. It is very efficient at transferring wealth from impatient people to patient people.
Okay, yeah, that makes sense.
No, but it's like trying to time things is not going to work out well. Trying to price them, like if right now you picked up Cardano, let's just say at 20 cents for argument's sake, holding it for $3 again is not necessarily more efficient than just if we hit a $2 range. That's already 10x. That is already absurdly risky. And that is already absurd. I mean, my plan for SHIB
great gains.
And my strategy around SHIB for a 500 and sub 500 accumulation is I'm estimating to take. I'm assuming I'm going to take about 80% of my profits if SHIB reaches 30% of its bull run high last season. So I'm happy to spend 3 years accumulating SHIB sub 500.
So on that note, are you saying that sort of thing could still happen in a bear market, and we could get a bear market rally for individual assets? Like, obviously, there's certain catalysts, and we know how people invest in crypto based on catalysts. Like, are you looking to make money still within this same, let's call it what you said here, like a 3 to 4 year window where things are going to be down technically in a bear market? Is there still money to be had here? Like, can we still see the 50 to 60% moves in crypto within a bear market?
You can always see massive moves in crypto. I mean, even during the previous bear market, there were still assets which nobody really capitalized on during this last bull run, but there were assets from beforehand which still had their spikes now and then. But trying to invest around that is an immense investment of effort. Like if you're not working and you're just speculating all day, then okay, yes, it's doable, but that is doing an immense amount of research for not really all that much potential upside.
It's very risky.
No, but the same amount of, this is to sort of jump off topic a bit, but the same amount of effort in researching which crypto assets during a winter scenario are going to spike in price. It could be spent taking like anything from courses and training to up your actual static income. The usual, whatever you do for money outside of crypto, do whatever training is necessary to increase your salary, or either train for a different job or train to upgrade your current job.
Right.
It's not just a tip for crypto; it's a tip for recession environments in general. It becomes very cheap to learn skills that will. if you're working in manufacturing today, sign up for night classes, sign up for weekend classes that will allow you to, if you know how to weld, learn extremely fine welding in order to make, high grade machinery. There's a lot of stuff like chip manufacturing, which will be in the next 10 years offboarded from Taiwan and onboarded to the US. Thanks unfortunately to COVID, a lot of the middle and low skill manufacturing that is done overseas nowadays is going to be repatriated to the US. And it's not
articles about that, and I've seen actually factories being built for that. So yeah, that's a real thing. Go ahead.
No, and the fact is that the difference between somebody who knows how to solder and somebody who works for Intel doing fine chip manufacturing is only about 1.5 to 2 years of education, but it is 2 to 5 times the salary. And I mentioned this not as like it is not bad general advice, but the fact is that the effort it would take you to find 2 or 3 crypto assets during a crypto winter that will maybe give you a 50% or let's just say a 2x in the middle of a crypto winter scenario versus the 9 out of 10 times where that won't happen and you'll lose a bit of money versus increasing your income source, and dedicating parts of that income towards assets have the fundamentals to do well, both to survive a crypto winter and, more importantly, to be built and to flourish in the next bull run. I mean, the cost benefit analysis there really is in favor of increase your income. I mean, I know that everyone always wants to increase their income, but there's an investment of time required. There's an investment of effort.
Sure.
And I mean, analyzing markets day in, day out during a crypto winter is not fun. Whereas focusing on maximum 5 assets that are going that you have absolute confidence are going to do well next bull run, it comes down to educate yourself, change your job, make a bit more money, or take on a second job, come up with a second source of income is what I'm trying to say, and use that stream but don't neglect crypto entirely, because then bull run will come and you'll be chasing green candles.
Right.
So this is why I say set a reminder on your phone every 4 months to check your ADA, check price of BTC.
Mm-hmm. Yeah, man. Dude, this has been awesome. I appreciate you, man. I'm gonna probably close it up here. Thank you, everybody out there, for listening. You're scaring me a little bit. I don't want to wait 3 years, but if we have to, we have to. And I think you provided some good advice. I mean, there's still a lot out there. I mean, the economy at large is changing. I think, in addition to what you said too, I mean, this is the time, I think, in my opinion, to start a new business online. I mean, it's, and I know it's hard. It's hard to do that, to really get that started. But if you can create a platform, if you can create a company, I mean, this is the time to do it. I really, truly believe that. I mean, most wealth is made during these types of times in recessions when you're willing to take the risk. But it could be something, as you're mentioning too. I mean, looking at where the macroeconomics are showing us where we're going and what types of jobs are going to be needed. Yeah, man, I always appreciate talking to you, dude.
I mean, inevitably, quick thought is inevitably in the next couple of cycles from the Fed, you're going to see at some point they're going to give strong indications of a pivot. Expect the markets to go crazy at that point, but don't go thinking we're back into bull run territory.
Right.
Like, always search for the argument that we are not in a bull run. Okay, and then word out your argument that we are returning to a bull run, and see which one holds up to scrutiny. Don't think that we're going back to the moon too easily. It's too much. It's too easy in crypto to fall into traps like that.
Yeah. Appreciate you, brother. Thanks for keeping us in check, man. Appreciate you. And thank you, everybody out there, for listening. Hopefully you got some value here. And judging by chat, I think people liked this macroeconomic talk. Maybe we'll do this more, Daniel, just talk more macro and see if we can carve out a little audience on YouTube for that and relate it back to crypto, of course. But yeah, this was fun.
Yeah. Thanks for having me.
All right, brother. We'll see everybody. Take care. Have a great one.